Imagine waking up tomorrow and discovering that the money in your bank account isn't worth what it was yesterday. Not because of inflation, not because of recession, but because a hidden mechanism you've never been told about quietly shifted, a system buried deep inside global finance, one that governments rarely explain, one central banks never fully disclose, yet it silently decides the value of every currency on earth. Today, we pull the curtain back on the secret valuation system that determines the future of your money long before you ever earn it, spend it, or save it. To understand why this system exists, we travel back to a time when the value of money wasn't a belief, it was a weight. Gold, silver, metal with mass, purity, and scarcity. For centuries, value meant something physical, something you could examine, measure, or even bite down on. But as trade expanded and economies grew, the ancient system hit a wall. The supply of gold couldn't keep up. Nations needed a valuation method bigger than their minds, more flexible than their coins: gold. And so began a new question that would reshape global power. How do you build a system that values currency in a world too big for metal, yet too unstable for pure trust? The answer began forming in 1944. The world was exhausted from war. Economies were devastated. Nations needed stability, fast. So leaders from 44 countries gathered at a quiet hotel in Bretton Woods to design a new financial order. The structure they built changed everything. Gold would back the US dollar. The US dollar would back every other currency. A new hierarchy was born, a pyramid with gold at the top, the dollar directly beneath it, and the rest of the world's money below. This was the moment modern currency valuation took form, centralized, structured, and heavily dependent on one nation's financial strength. But this system had a flaw waiting to explode. By the late 1960s, the US had issued more dollars overseas than it had gold to support. Nations began demanding gold in exchange for their dollars. The system was collapsing from within. And in 1971, the world witnessed a historic shift when Richard Nixon ended the dollar's convertibility into gold. In a single announcement, money was unanchored from metal forever. Currency value no longer depended on physical reserves. It depended on belief, structure, and the invisible mechanics of global finance. This was the birth of the secret valuation mechanism, quietly shaping our world today. But no system escapes its moment of exposure. In 2008, a global financial crisis erupted from collapsing mortgage debt. Banks failed, markets crashed, economies trembled, and yet something unexpected happened. The US dollar, even though the crisis began in the United States, the reason was hidden within the valuation hierarchy. When fear rises, the world runs toward the currency at the top, not because it is perfect, but because the system around it depends on it. The dollar didn't rise because it was safe. It rose because the system needed it to. This revealed the true nature of modern currency value. It is structural, not natural. After 2008, nations realized the power embedded in the system. If money was no longer backed by metal, if value came from belief, influence, and architecture, then currencies became tools of control. Governments printed more money, central banks pushed interest rates to extremes, debt surged beyond historic levels. From 2008 to 2022, humanity created more debt than in all previous generations combined. Yet currencies still held together. They still traded, they still functioned, not because they were stable, but because they were interdependent. If every nation uses debt, if every central bank relies on the same system, if every economy depends on global liquidity, then no currency can collapse alone. This is the hidden glue of the modern financial world. Over the years, Many nations attempted to break free. China built new payment networks. Russia tried to reduce reliance on the dollar. Europe strengthened the euro. Cryptocurrencies promised independence, but the gravitational pull remained. More than 90% of global currency trades involve the dollar. Over 60% of world reserves are dollar-denominated. Half of global trade invoices are priced in dollars. Even Bitcoin, the symbol of decentralization, is valued in dollars. The system funnels everything back into the same core. Today, a single decision by the U.S. Federal Reserve can cause currencies across the world to fall or rise overnight. Not because those nations are weak, not because their economies change, but because the valuation system still responds to the top of the hierarchy. And that hierarchy is beginning to tremble. Global trust is fading. Debt is exploding. Geopolitical tensions are shifting the world's financial center of gravity. The foundation built in 1944, reset in 1971, reinforced in 2008, is preparing for its next transformation. Three truths now emerge. First, currency value is engineered. It is shaped by systems, incentives, and power, not nature. Second, the world is financially interconnected. A crisis in one pillar can shake the entire structure. Third, the next shift in the valuation system will redefine the future of money everywhere. For the first time in decades, the pillars are shaking. The system is recalibrating. And when it finally resets, the value of every currency on Earth will be